Hello, my name is Steve Bigelow with the Candlestick Forum. A question we always get asked is, how do you read candlestick charts and what do we need to know? And that's fairly easy or fairly logical. First of all, we want to know what the general direction of the market is. And that's just using the candlestick signals in conjunction with what everybody else is watching. We saw in the Dow this past week where notice how they opened below the previous day's open and traded lower. That's usually a very strong bearish signal that the bulls are not in control anymore. Then it popped up over the last few trading days. But notice the one thing that is a very strong indicator about investor sentiment. Simple T-line rule. As long as you stay below the T-line, you're still in a downtrend. So the fact that the Dow could not get back up through the T-line and your stochastics are still heading in a downward direction, that still kind of implied that investor sentiment was still bearish. And when you have investor sentiment trading below the T-line, that means any bad news is going to probably instigate a lot more selling. And conversely, same thing on the bullish side. Any good news is going to stimulate a lot more buying. So step one is you want to see what the overall market direction is doing. We can see that also in the Nasdaq. You can see how it was rolling over, and now they did a little bearish kicker type signal right here at the T-line. First implication is we're heading to this level, and then possibly a wave 3 to the downside. So with that in mind, if we know that we're in a downward direction, that allows us to take advantage of the information we have built into our patterns as well as our signals. Our special recommendation that we put out yesterday was on TWLO that if it opened lower, we wanted to be shorting because there's your double doji setup. And that's usually a strong implication that they've come down on the short side, they've consolidated, and then again, your doji rule tells you they're going to move in the direction how they open after a doji. Strong implication that if they opened lower, they weren't coming up above the T-line. And then our recommendation today was if they opened lower, they were still heading to this target level. And if they breach that target level, wave 1, wave 2, going into wave 3. So anytime we can see that the markets are producing these type of patterns, and we can see that same pattern occurring in individual stocks, our recommendation in a few or last week on CII was look at your bearish best friend. And if the market is in a downtrend, same scenario, wave 1, wave 2, the likelihood of wave 3 was going to continue this trend as long as there wasn't a major change in the overall market. So anytime we can see this setup, and then we can start seeing the dojis, that if they breach this level, Crocs was one that in our chat room, people were shorting because of this very simple wave 1, wave 2, bearish J-hook pattern, wave 3, with all the indicators being right here. They weren't getting back up above the T-line, had a doji gap down, and now our doji rule, if they're trading lower after a doji, they're probably heading lower. And that just puts you in a position of being in the right place at the right time. And we have projected targets. This could come all the way back down to this level. Why? Because that's what everybody that watches a trend support level is watching. So when we shorted AFRM because of the bearish engulfing signal, we knew there was a trend channel or a trend. So where's our next likely target? We're going to stay short until it hits that potential target. Now, does that mean it's going to get there? No. Remember, the number one criteria for analyzing a candlestick chart is what are the signals telling you? So the implication is it could get to this level, but if we see a candlestick reversal signal before it gets there, That's more important. We recommended BPMC. Notice the doji failure at the 34, closed below the T line. We can see wave 1, wave 2. Now we know if it breaches this level, wave 3 could still be a very strong downside. So why would we suspect more downside? Because if you can look at the major market indexes and you don't see any buying, stochastics are heading lower. Here's our first target, at least another day of selling. And if it breaches, the Dow breaches this level, that implies wave 1, wave 2, wave 3. So that'll be it. Now, if you've been reading the books, again, these are written not to be fancy or full of fluff. As you can see, as we put in our YouTubes, we want to be straight to the point. When I was learning how to invest, I wanted you to tell me what to do, not tell me all the fluffy stuff that goes with it. So if you're reading these books, they're very easy to read and they're very succinct as far as showing you what the signals and patterns are. You might want to enhance your learning process by taking advantage of our 2-week free trial on our website. Now, our website, candlestickforum.com, we have a chat room that's open every day. We've got a couple hundred people in there. We've got people that have been using candlestick analysis for years. So it becomes a place where you get a lot of good trade setups, number one, but more importantly, you get a lot of questions that you can, or get answers to questions you may have. So it dramatically speeds up your learning process of how to use candlestick analysis effectively. So try it. You got nothing to lose. It just enhances everybody's learning process. Plus, during the 2 weeks, you'll see that there's a lot of good information in the chat rooms. Plus, during that time, we've got a training sessions for members on Monday nights, as well as our Thursday night sessions. And then usually we will have a special training during the week for stop losses or improving your entry and exit strategies, or how to scan for the best trades, things that all apply to the common sense analysis of candlestick signals. That'll be it. We'll see you in the chat rooms.